Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is a Forex quick look. Going to take a look at the dollar versus Canada. It's a currency pair where the U.S. dollar is actually getting stronger versus the Canadian dollar. That is running counter to what is happening versus a lot of the other currency pairs. The other currency pairs have the dollar getting weaker. Why? Because the ISM data today was weaker than expectations, leading to lower rates and the lower dollar, but not against the dollar versus Canada. And I'll talk about that in this video. So let's get started. This key event this week coming out of Canada, actually, and that is the Canadian interest rate decision that's going to take place on Wednesday, and the Bank of Canada is looking toward easing credit conditions first since 2023. So that may be a contributor to the Canadian dollar's weakness in trading here today. The dollar Canada moving higher, the Canadian dollar gets weaker when that happens. And that runs counter to a lot of the other currency pairs, where the dollar is once again getting weaker and the foreign currency is getting stronger. So the Bank of Canada interest rate decision may be in play, especially in light of the fact that the dollar Canada moved lower last week. Canadian dollar getting stronger ahead of that rate decision. Also in play is some technicals, and one is this trend line. This trend line connects these two lows right here, and you can see in trading here today, the price came down to that trend line not once but twice, found support buyers against that level. These trend line support levels also came into this swing area right through here, which is defined by, well, a number of different swing highs. I can actually go back to these levels right through here, but putting all these arrows where the price was a ceiling through here. We went above the ceiling, but then failed, and the market used that level as a ceiling again before moving to the downside. It was this day right here where the price moved higher and didn't return to that level until this week, the week toward the end of April, early May, where we found support buyers once again pushing the price to the upside. Admittedly, a few weeks ago, the price went above and below this level right here, but even in that time, the price did try to find support against the level. It failed and then reestablished support here, and in last week's trading, we found support again against this area, and today we did it twice as well, on two separate occasions as well, pushing the price to the upside on each of the occasions. So we are finding a reason to buy the dollar versus Canada, and that's forcing the price to the upside. So going forward, guess what? If the price were to move below this area, that would increase the bearish bias for the dollar versus Canada. That would imply a Canadian dollar getting stronger, and then we'd have traders looking toward the 100 and 200 day moving averages. Those levels come in at the 135, looks like 80-ish type level. If we break below both those converged moving averages, that certainly would be a bearish bias, leading the Canadian dollar higher in the process. But it would likely be a pretty strong support level on any sort of dip toward those two moving averages. It just doesn't happen often where the two moving averages come together like that, and that should increase the level's importance going forward. Now, on the top side, if the price were to continue its run to the upside, we would be looking toward these two blue and green lines. These two lines represent the 100 bar moving average on the 4-hour chart that comes in at 136.54, and the 200 bar moving average on the 4-hour chart comes in at 136.80. Now you can see that the price in trading here today did move above the lower of those two lines, but failed, and now we're back near that level, trying to move above that level. So if the Canadian dollar is going to get weaker, the dollar can move higher. You need to get above both those levels, the 100 and 200 bar moving average, and then stay above those levels. Admittedly, over the last few trading weeks, the price has tried to move above the higher of those moving averages, only to fail on each occasion after seeing momentum here and momentum here on the top side. So if the buyers are to take control, we need to get and stay above that 200 bar moving average. Keep that in mind. Up above that level, we have this swing area, and might extend that up to the 137.42 level. So 14 to 28, maybe 42. Those are the next targets on the top side. Arguing for some resistance up here, I should say, is that we do have higher lows going back in time. This is the high price that we saw, high price, high price, high price, high price. Each of them of lower. So does that imply that we get up to the swing area and find willing sellers against that level? It may be, so be aware of that as well. But the buyers and sellers are certainly battling it out. We do have good support down below, but we have work to do on the top side to push this price higher. That's my updated and detailed look at the dollar versus Canada as we head into their interest rate decision, not tomorrow, but the day after. My name is Greg Michalowski. Good fortune with your trading. Bye bye now.